every investment video out there tells you what to buy once you have money in an account. But what if you don't have money in an account yet? Where do you start? What if you're brand new and you don't even know what step 1 is? Then you need to watch this video. I'm gonna walk you through step by step, starting from 0. And you're gonna wanna stay until the end because I'm gonna show you how you can legitimately make 100% on your money and you probably don't even realize it. Hey, thanks for checking in. I'm Michelle. This is the Cressivo channel. This is the channel where we talk all about finance and mostly options, selling options to create weekly income. And that's a great strategy, but for the people who don't have anything started yet, it leaves them missing a little bit. And that's what this video is for. So if you don't have anything started, you have to watch this video because everybody starts from 0. Now, the first thing you have to do is you have to open an account. Now, there's lots of places to open an account, but you're gonna wanna use a brokerage company that lets you dollar cost average. I'm gonna talk about that in a moment. And you're gonna want a brokerage account that lets you buy fractional shares. I'm gonna talk about that in a moment too. Now, there's a lot of choices out there, but just to make it easy, just pick Interactive Brokers. Now, I don't get paid for recommending them at all. They're one of the easiest platforms to use, and they take clients from all over the world. So just start there. Now, when you open an account, there's one of 2 main types of accounts that you can open, either a taxable account or a retirement account. Now, forget about retirement account for now, because taxable accounts gives you more flexibility. You can make money, you can take money out, and there's no restrictions. So just choose that kind initially. Now, when you fund your account, you can do that in a couple of different ways. You can mail an old school check-in, or you can set up direct ACH. Usually direct ACH is a bit easier. So you need your bank account number and your routing number. Now, oftentimes people think that you need a lot of money to get started, and that's just not the case. In fact, oftentimes you can open an account with no money and just dollar cost average in a little bit at a time. Now, let me explain to you what dollar cost averaging is. It's like one of the wonders of the world. You're choosing ahead of time to put X dollars in on a recurring basis. And that could be any amount of money. Let's say $20 a month, $100 a month, whatever fits your budget. And an advantage of doing it the same amount each month is that, number one, you take all the emotion out of it. So you don't have to be thinking, oh my gosh, is this the right time to buy? Is this the right time to buy? No. Also, you don't have to think about it and it just becomes habit and automated. And most important of all, when the market is high, you're accumulating fewer shares, and when the market is lower, you're accumulating more shares. And over the long term, that's a really good strategy to use. Now we want to talk about what you should invest in because there's lots of different choices. Stocks, ETFs, mutual funds. Where do you start? Now, if you're brand new, an advantage of using an ETF is that it's like a basket of a whole bunch of things. So it's often a good place to start. If you guys want to join my inner circle, which is free by the way, I send emails with suggested allocations. So you can use that as a guide. Now you could pick just one ETF, but you could also pick a few, especially if you're working with a broker dealer where you can buy fractional shares. So you don't have to buy, let's say 100 shares at a time. Now, one of my favorite ETFs is XLK. And it's a technology ETF from State Street. The reason I like it is because I love tech companies. I feel like the world is technology based and AI is just at the initial cusp of where it's gonna be over the next 10, 20, 30 years. Now, it's gonna have some volatility, but especially if you're young and just starting out, volatility is totally okay because over the long term, good quality companies go up in price. Now, if you're a little bit older or you're a little bit more risk averse, then maybe you want to start with something a bit safer. For example, you can use the ETF with the ticker symbol HDV. That's an iShares fund that focuses on dividend stocks inside the fund. That's going to have big blue chip companies like ExxonMobil, Procter & Gamble, Home Depot, Philip Morris, Coca-Cola. Now, I want to take a moment and talk about correlation because most people think that the more things that you stuff into account, the safer you are. But oftentimes they're correlated, meaning like one company goes up and they all go up, or one goes down and they all go down. But it's always a good idea to have kind of non-correlated assets. So when we think about non-correlated assets, we can put like regular big company stocks as one of the investments, and then we can use something like gold as a different investment because when stocks go up, gold might go up or down or stay sideways. So it gives you a bit more of a smoother ride. Another non-correlated asset would be like bonds. MUB is a really good municipal bond fund that's super safe and works usually in opposite to stocks. So usually stocks go up and bonds go down. So that will give you more of a smooth ride as well. Now, these are just different ideas. I'm not telling you exactly what to invest in. I'm just giving you ideas on what you could look at. And don't forget to rebalance at least once a year, because as time goes on, different investments pay dividends and capital gains, but disproportionately. So let's say if you started out with 5 things and each of them at 20%, after a year, they're gonna have different weightings. So you wanna take a moment and rebalance them to where you started. That's usually a good idea. Now, I told you to be sure to stay until the end because I was gonna share with you one surefire way that you can make 100% return on your money. And what that is participating in your company's retirement plan. You see, if you have a regular job, most jobs will have a retirement plan where they match dollar for dollar. So every dollar you put into a retirement account, they match it up to a certain limit. If you're not participating, you're like leaving that free cash on the table. And if you are participating, you're automatically getting 100% return by the dollar for dollar match. Now, I hope these ideas really help. Listen, don't feel bad about where you might be because it only matters where you're gonna get to. And everybody starts from zero. Now, make sure you're subscribed to the channel because this channel has all kinds of videos helping people just like you learn how to invest and create income over time. And I have a free Inner Circle program, so make sure you join that. The link is in the description below. That way, when there's new events or offerings, you'll be one of the first to know. Now, I hope you like the content. If you like the video, smash the like button, subscribe to the channel, and I'll see you in the next video. Happy trading.